Tuesday, 24 September. Critical price points. First, the weekly chart. It's messy, but usually it's messy, but I'm used to having those price points in my mind when I trade. And right now, the most critical price points in the weekly chart, that is the weekly high and these new week opening gaps. On top of that, we check this wick. As you can see, the 25% range of that is in very close correlation to the weekly high. So we just use the weekly high now, and keeping in mind that the previous week wick, the 25% range of that is in close correlation. Then we zoom into the 1 hour chart. This was the high of the day. As you can see, this wick, we measured that. We see the 25% range of that. Then we have the previous day's wick. The 75% range of that are exactly the same. So that was a point of interest for me to trade higher, and I'll later explain later on what other factors I took into account to trade that price level at 19,976. Let me write that down, 19,976. But the most important price point was previous day low, which was taken out before we went higher. So this is a clean chart. Yesterday before the day started, I was doubting about where the price could go. I thought like, okay, we have to take out these relative equal lows to then go higher, and I'm not sure what to do with these lows then. But price was willing to trade down previous day's low. As you can see, previous day's low, the new day opening gap, then you have the first percentage fair value gaps of yesterday and the day before, and this is today, and then this is the weekly high and the target for this week or tomorrow. Today could have happened, but it didn't happen. So previous day high, previous day low, and weekly high. We check what is in close correlation to that. We just did that with the 75% range wick, but in here we want a long. So what is in close correlation to that is the 15-minute order block. On the 15-minute chart, that's where we frame our trades, the setup, that is. So then we have the entry model. This was 9:30 open. This was first stage of reaccumulation. We have 1, 2, 3. We take out this sell side, and we take out the new day opening gap, where you have the high of that. This could have been a point of resistance, and then you have 75% of the wick of 19 September. So after 10 a.m. we could have seen a volatility move, and I wanted to inverse this to then be sure to inverse this and look for an entry somewhere around here. But we didn't get that, as you can see. So this is the other entry. This is really the entry that I wanted to take, the long entry, and I will very, 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 very clearly explain that. First, we start with the reasoning of why we take that trade. Is at 9:30 open, we see that we leave relative equal highs in here. So first we want to take out some form of sell side to then have enough fuel to take out these relative equal highs and draw up to Thursday, August 22, the buy side target. Like I said, I saw this sell side in here, then I saw this sell side. We took that out at 10 a.m. and then we rallied down to take out these sell sides, and then somewhere along the line in here, the midpoint of that gap, of that fair value gap, maybe there could have been a reversal, but we drew down all the way to take out this low and in the order block. Then we have the opening gap. As you can see, the opening range gap of exactly 65 handles. So we divided up in quadrants. As you can see, it traded down from the opening price. 30 minutes later, it traded down to midpoint. After that, I'm really interested to take a long position, especially after we took out sell side, and we don't have to take out these relative equal lows. Remember that. So this is really, if we are really bullish, then this would have been a reversal. So what do I look for then? Is this to inverse. So we draw down. This is where I wanted to see some support. After 10 a.m. this, we take out this sell side then, and then I wanted to see a form of rally up to find support in here, find support in here, find support in here, and then trade to the first percentage fair value gap, and then trade higher. But we didn't get that. We traded lower, which this is 10 a.m. candle. As you can see, we are throwing down, 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 down. The 10 a.m. candle, I forgot to put the macro times in here. So 10 a.m. till 10:10 in here. This is a point of interest where I wanted to long. Why? Because we have the daily wick. We divide it up in quadrants. We see the midpoint of that is being respected. We inverse this. Then we come up in here. We close above the new week opening gap. And then I wanted to see this hold. I've seen this trick multiple times before. There was a previous day low resting in here, and I wanted to be sure that it's not going to trade down to the previous day's low to then trade higher. So we have one, sell side is engaged again, and here we trade lower, we trade higher. So this is now a fair value gap that has a high point of interest of me. When we trade up in here and we trade down, then that's an entry for me, but we spend too much time in this fair value gap, and then we trade lower again. We engage sell side again, minor sell side liquidity, and then we trade down to the previous day's low. I have to admit, I've seen before that we did this and then trade higher and then trade lower again to trade to it and through it. But this time it didn't give it to us. We traded with speed and power above this fair value gap. We formed the breaker with the low, with the high, with a lower low, and then a higher high to expect to form. In this case, we have the order block, the previous day's candle, the previous minute candle. We don't trade to the consequent encouragement of that. While doing so, we leave a fair value gap. In this case, we trade down to it. We could have entered in here. We could have entered at the opening price. When it comes in here, it trades down the opening price. And in here, we have the same logic. When it comes down in here, the opening price of that, we enter for a long position. But this was the main entry. In here, also, you can see that the wick is coming to a consequent encouragement of this new week opening gap, which is also the 25% range of the daily wick. So we have a high point of resistance now, and it doesn't need to trade back into here. If it did trade it back into here, then I would close the trade and trade the PM session if possible. But I don't want to focus on the PM session yet. So that's it for today. I'm going to fill in my journals and going to bed. Thank you for listening.